students, not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Every walker who joins HeartWalk means more people trained in CPR. Take the first step and register for your local HeartWalk. Find your local HeartWalk at heartwalk.org.
Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month. It's titled Talking to Your Kids About Inheritance. And Mike, one of the pieces that I think needs to be focused on in this discussion is how long-term care situations may influence what kind of inheritance is able to be passed on and what plans are for long-term care.
Yeah, we all know the vast majority of people do not carry long-term care insurance, whether for right or wrong, that is the case. And so having an understanding with the kids, not only of, who's in charge of making medical decisions, but how you expect that those medical decisions could affect a future inheritance and what to prioritize, right? Maybe there's a family home that's always been in the family that you want to make sure is passed along, and valuing that appropriately compared to retirement accounts or something else can be confusing for children.
When we talk about the impact that long-term care costs can have on an inheritance, what's the scale that we're talking about these days?
Well, I mean, in Northeast, where this type of care is typically most expensive, you can be talking about pushing $200,000 a year on certain types of long-term care. Obviously, it can be done more affordably depending on your area and what type of care you are receiving. But in the most severe cases, it can ruin someone financially pretty rapidly. And so understanding that and having those conversations early is important.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it at armstrongadvisory.com, and that phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Wednesday edition of the Financial Exchange. Paul Lane, Marc Fandetti, and Ben Kitchen here with you as we kick off the second half of the year for 2026. Markets wrapped up what was a very strong first half of the year, with Wall Street having its best quarter in 6 years for Q2 that we just closed out yesterday. The S&P 500 was up 15% over the second quarter, and the NASDAQ was up a whopping 20% over Q2. The Dow Jones also had a good run as well. Today in markets, relatively mixed territory. This is typically a pretty quiet week in terms of trading as we prepare for the Friday, July 4th holiday, or July 3rd. That will be observance of the July 4th holiday. S&P 500 off about 12 points, and the Dow Jones relatively flat as we head into early trading here. We also will get a jobs report. That will be a big focus. That will come out tomorrow morning for the month of June. And we also are going to be attuned to any commentary from the Federal Reserve in terms of what they sort of come out with in terms of their thoughts on interest rates. But we'll start by kind of recapping the first half of the year. I mentioned it in the beginning here, what was a really good run for many of the major indices, and certainly the semiconductor index has been an area of significant growth. The Philadelphia Semiconductor Index is up a whopping 88% over the course of the second quarter, and that really, Marc, has been the story here. Is you've seen continued strength in the tech sector that has propelled the S&P 500 to be up about 10% year to date. We also have had a rally in small caps as well, an area that we haven't really spoken about much, and they've languished compared to their larger cap peers. But the Russell 2000 was also up 22% through the first half of the year. That's its best start since 1991.
Yeah, it's interesting. As a result of the rally in semiconductor stocks, which had been relatively cheap on a price-to-book basis, you've got value stocks across the capitalization spectrum, capitalization meaning large, mid, and small, outperforming growth stocks. You would think the story this year would be growth, because you think tech, you think growth. But many of them were so beaten down. And they'll get there again if you subscribe to the cyclical theory of semiconductor stock, performance. They're highly boom-bust. That makes them value stocks periodically, and then when they pop, value indices explode. Like if you'd asked me, I would have said, well, growth stocks have outperformed probably value stocks year to date if the story is tech, but that's absolutely not the case. That's one thing that jumps out. A couple of other things jump out too, but I know you got more to cover.
No, that is an interesting point. I feel like just because of just the rapid growth that you've seen of those memory component providers like the Microns and SanDisk of the world, who have just returned tremendous returns year to date, that you would think that, hey, it's tech, it's growth that really has been the
on a price to book basis, probably
the driver. But as you mentioned, the Russell 1000 value, which is tracking those value companies performing better than that of the growth sector out there.
Sorry, Paul.
And another piece that has been of focus is the energy sector. Obviously has been a strong returning this year. We know the reasons for that, with oil rising dramatically this year, though coming off its recent highs, and continues to confound me with its price movements, with West Texas Intermediate sitting at $70 a barrel at the moment.
Yeah, I don't know that I have anything to add to that. The price of oil, any commodity for that matter, even for the experts, is really hard to forecast.
But you were going to say more commentary on just how the market's fared.
Looking more broadly, most of us have exposure to stocks through, say, a target date fund or some type of balanced or asset allocation fund in a 401k plan. Part of that is international equities, typically, because although we're very U.S. equity centric, understandably, every country's investors are home biased. Is the way researchers like to talk about that. So you tend to own way more in proportional terms of your country stocks than you do other country stocks. But other developed markets have provided investors with returns similar to U.S. markets over a very long time frame. U.S. markets have been dominant lately, but that's not always been the case, and it won't always be the case. To date, the broadest measure of foreign market performance, no need to name the index because we just get bogged down in all the terminology, is up 40% more, 14 versus 10, than U.S. equities. So U.S. equities have delivered solid performance in the first half of the year, up 10%. If you annualize that, you get about 20. Great. But foreign equities are doing even better. And so my point here is that the well-diversified investor, say one who uses a target date fund or is able to spread their assets out through using single manager options, and say their 401k plan is doing better than the U.S.-centric investor.
And that picks up a trend that has been going on the trailing 12-month basis, too, where a good portion of 2025, that was a similar story where international equities outperformed the U.S. peers. Like you mentioned, there still is a gap there this year where international has outperformed U.S. markets. It's still large, but not as large as it was last year. But it does continue the trend that international equities have continued to perform well.
I should mention some of this could be currency. I'm not looking at the current. So when your foreign stock goes up, it could be because the company does something investors weren't expecting, and so they expect high, whatever. They push the price up for whatever reason. It could also mean that the foreign currency in which that company does business, if it's Sony, it's yen. If it's Volkswagen, it's euros, has appreciated relative to the dollar. So you always have to think about, is it currency that's driving it? Is it the underlying security? It's partly currency, but mostly, in this case, underlying security.
Heading into this year, the labor market was of significant focus, but that has largely shifted where now we spend a tremendous amount of focus again on the inflationary picture. The U.S. and Iran war, as many listeners know, really sparked up prices at the pump in terms of the impact on the oil and gas side of things. And then you had new chair Kevin Warsh come out recently stating, and I believe he reiterated these comments again today, and just reading through some of this morning's news, that inflation is too high. We sit at a point where if you look at the Fed's preferred measure of inflation, it's about 4% year over year that's been running. Obviously, the target has been for the Federal Reserve 2%, which we have had a significant amount of difficulty meeting over the last several years here. So now investors are, continuously following what the interest rate picture may look like. Heading into this year, there was this presumption that we would see interest rate cuts because of the war and some of the inflationary pressure. That sort of paradigm has shifted where now there is much more focus on what type of hikes we may see, if any. Looking at the next meeting, which won't be till the end of the month of July here, it does, according to the CME futures, look like that the most likely path here is that we would stay the course and not see an interest rate hike come at the end of July. However, if you go further out into the fall in September and October, there is some probabilities priced in that we may see a 0.25% hike. So certainly that is of significant focus for investors. And we talk a lot about the tech sector. Any increase to interest rates for these companies that are typically predicated on future earnings growth, that can really lead to a bit of a sell-off if we do see further interest rate pressure heading over the course of the second half of the year here. The commodities market has struggled quite a bit too after coming out of the gates really hot. You had gold and silver off 13% for gold over the course of the last few months, and then silver was off about 20% over the last quarter. Year to date, the commodity index is still in positive territory, but this last quarter, there was certainly a shift, and some of that comes from the interest rate changes that I was speaking of before, putting pressure on those commodities. We're going to take a quick break here on the Financial Exchange. When we come back, talking a little bit about the labor market, Microsoft announcing some layoffs, and this is a trend that we've seen all across some of the major tech sector companies. So we'll cover that more on the Financial Exchange right after this break.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long, only here on the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to DAV5K.Boston and make your donation today. That's DAV5K.Boston.
A little bit of news here on the AI front before we get into the labor market and discussing some recent news from Microsoft to lay off some employees. Anthropic has said that President Trump's administration has lifted export controls on their Claude Fable 5 and Mythos 5. On June 12th, Howard Lutnick, the Commerce Secretary, had put export controls on the Fable 5 model that Anthropic has because of concerns that there was a jailbreak way that was discovered that could bypass some of the guardrails of the model. There are tremendous amounts of cybersecurity concerns with these new AI models specific to Anthropic, and as a result of that, it created quite a clash between Silicon Valley and the White House, where, of course, Silicon Valley has sort of criticized the government's ad hoc approach to regulating AI, and you've also had foreign governments accusing the U.S. of punishing their allies by imposing the ban. But like I mentioned, to lead here, that ban has been listed. OpenAI is set to release its ChatGPT 5.6 in the next few weeks, and the administration is also trying to look at what that potential model may look like. It will be interesting to see the continued sort of push and pull between the administration trying to protect cybersecurity concerns and everything that comes with some of these new AI models, and obviously Silicon Valley's aversion to any interference in trying to develop new technologies here, as there continues to be a race to develop the best model and compete with other countries, most specifically China.
I mean, if this is potentially pernicious, like existentially threatening, as some people say, and I should stop there. Is it? You do a lot of reading on this subject. What's your take?
From all pieces that I've read, and again, certainly not an expert subject on the subject matter, but it does appear that what was concerning to me on the cybersecurity front is that there were significant flaws that this model was able to pick up in a lot of critical infrastructure that we use on a daily basis to power our financial systems and other key parts of the digital world that we live in. So based on what I've read, I do buy in that there was a risk that loomed out there from people who are more well-informed on the topic than I am.
So if it could potentially take down all of our infrastructure, digital infrastructure, either a bad actor infiltrates it or it develops a mind of its own and decides to screw us, it's an existential threat. I think we have to first decide, do we think it is or do we think it isn't? And then if it is, isn't the answer, I'm sorry for editorializing, it's more of a question really, why not do what we did with nuclear power, which is effectively create a commission to control it? I mean, why are we letting the private sector see that? To me, I think I know the answer to this. The private sector, coders specifically who are working on these models, understand how they work. Nobody else does. People in finance, as glib as they are, as articulate as they can be, their job is to sell you something. So you never trust the guy in finance trying to sell you something. He's conflicted. Trying to sell you. No, we do good. I know what you're getting at here. We're in finance. What do we do? Financial planning, long-term investment management. We're not trying to sell you anything. If we think Manager X has a cheaper way to get the beta that you need to realize your return goals, that's where we'll suggest that you go, right?
Sure.
So and I'm sorry, you're right though. I shouldn't paint. I'm not just being defensive, even though I feel really defensive. I shouldn't paint with that broad a brush. When a salesperson, any domain is trying to sell you something, they're conflicted. So
yeah, ultimately
they're conflicted.
The bottom line is financial people don't understand this technology.
Altman is conflicted. Zuckerberg, all of these.
Oh, sure.
These people are all conflicted. They're all
pumping up their own book.
They're pretty much right.
Yeah.
I mean, you can't. It's good. It's in the interest of being a good consumer, good citizen. You can't. Sorry to say, you just can't trust them. So we can't trust them. This stuff might present an existential threat. It seems to me like maybe we're not trying to control it at the right level. Control it like we did nuclear technology, which is give the government a monopoly on it. I hate to say it. I mean, as a libertarian-ish person,
it does sound different from your usual
yeah, it
approach.
is. But I wouldn't say let anybody build a nuclear bomb either, because again, it could. Now, in the days of the Atomic Energy Commission, the threat wasn't existential. We didn't know about nuclear winter, I don't think, and these were atomic, not nuclear weapons. There was a difference. Still, though, it doesn't seem to me that we're approaching this with the right urgency. Is that fair?
I'm not sophisticated enough to know how large does the threat loom. From what I've read, I don't think existential necessarily would be the word that they would attribute to the potential risk, but there was significant concern that if this got into the hand of bad actors who were just as sophisticated on the tech front, on the hacking side, and they were able to utilize this model to breach security flaws in, I'll just say, banking systems or wherever they were able to find flaws, that could potentially lead to some very serious issues.
If I were a politician, I'd be thinking this gets out even if there's only a 0.5% chance, and it takes down the economy effectively because of the critical nature of, I'll just say, digital technology. That ain't going to happen on my watch. I would err on the side of imposing incredibly stringent controls.
It is
to the point of suppressing it completely.
It is
maybe that's not possible.
Noting that Anthropic did put together this glasswing endeavor where they basically brought together what was initially, I believe, 15 different corporations across many different lines of business before these models were released the first time around, or perhaps it was a prior iteration of them, to allow these large corporations that have significant impact on our financial institutions and otherwise to patch up some of the security flaws that were found within this model development. So they have taken some steps to try and be sort of practical on it. I would push back to, I see both sides of this,
by the way. I'm just asking.
where, is the government sophisticated enough from a technology perspective to be apprised of everything?
They're as sophisticated as any other player. Where you hire experts. You treat it again like you did the breakthroughs in atomic and then nuclear energy. Otherwise, we're just letting the fox guard the hen house.
Hopefully that
doesn't it feel like the fox is not just guarding the hen house, but like designing it and hiring the security guards. And I mean, we're taking because there's no expertise apparently, and not sufficient expertise in government to regulate this stuff.
Perhaps, and the problem with tech always is I feel like it evolves more quickly than the government can even put resources together to properly address all the ongoing issues.
Yeah, it's true, but that's true of it. I mean, geez, again, think about the 50s and 60s.
Right. No, anyway, it's interesting to continue to follow here. That news just coming out this morning, so lifting that several-week freeze on Anthropic's most recent model, the Fable 5. Be interesting to see what happens with the new version of ChatGPT 5.6 if they're under the same scrutiny in the next few weeks when that's rumored to be released here. Taking a look around at markets, we're in relatively mixed territory in what is a pretty slow trading week, but we'll have more for you on the markets right after this break with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are mixed as we begin the day here. The Dow Jones is up 75 points, or 0.14%. The S&P 500, on the other hand, is down 10 points, or down 0.14%. The NASDAQ is off 127 points, or just about 0.5%. And the Russell 2000 is up 0.4%. Nike shares are up 3.5% after reported a sales decline of 12% in the greater China market. Despite the significant decline in a key market, Nike still reported an earnings and revenue beat in its fiscal fourth quarter financial report. Bloom Energy is up more than 2% after it announced an expanded partnership with investment firm Brookfield to finance power for artificial intelligence infrastructure projects. Bloom said in a press release the expansion shows sustained demand from AI infrastructure developers. Kroger shares are off over 2% after the company announced it will acquire Giant Eagle, a food and pharmacy retailer, for $1.65 billion. Kroger CEO Greg Foran said in a press release that the acquisition expands the company's reach into attractive adjacent markets. And finally, Shutterstock and Getty Images are tumbling after Getty called off a proposed merger with Shutterstock due to demands from a UK regulator. Shutterstock fell sharply. It's off more than 28%, while Getty has declined 8.5%. I am Ben Kitchen, and that was Wall Street Watch.
Taking a look at a recent headline here from MarketWatch, Microsoft is reportedly planning on laying off thousands of employees, about 2.5% of its workforce. And this follows a similar trend that we've seen over the course of this year, where a lot of big-name tech companies have come out and announced layoffs. You had Meta announcing 8,000 employees that are due to be laid off, Oracle another 21,000, and then Dell and others have followed suit. Amazon too is in that mix. And it's been interesting to track, Mark. I was doing some research before the show because we just had a JOLTS report yesterday, and we'll obviously get another report on the jobs report coming out tomorrow morning for the month of June. The labor market has actually looked quite resilient this year. Heading into 2026, it was a concern, but we saw on the job openings front an increase yesterday to about 7.6 million. That was the highest that we've seen since May of 2024 and above expectations. And we're anticipating some 100,000 jobs that perhaps were added over the month of June. And so what it seems to me is that there has been sort of this split between major companies announcing headlines, specifically in the tech sector, that are garnering eyeballs and news headlines, but it's not really reflecting in the data as much.
Yeah, I mean, who cares? Microsoft has doubled their headcount in the past 10 years. It's up 40% in the last several years. They need to pair staff, probably, and it's a natural time to do it. We might be late in the business cycle. That's point number one. Forgive me for being flip. I shouldn't say who cares. People lost their jobs.
Right.
I bet they're skilled and they'll find new jobs. But once again, it depends on why you're using. I say once again because I'm thinking about the fact that I may have said this in the past. Not that anybody would remember or should have to. The churn in the economy month over month is tremendous. You mentioned JOLTS yesterday. In that report was an estimate of 1.7 or 8 million discharges and layoffs last month. 1.78. I'm just going to round up. Call it 1.8 million. So a few thousand jobs here or there. Again, I don't mean to diminish it. Somebody's life was upended by this, I guess. But in the scheme of things, is what we use data for here. We try to use it to estimate whether the economies, or at least I think about it as the economy running too hot, too cold, or just right. Labor market appears stable. Job creation appears to be enough to keep the unemployment rate stable. The unemployment rate is probably not low enough to be pushing inflation up.
Mm-hmm.
Probably. I don't know, though. It depends on other factors, including what happens with energy prices and therefore inflation expectations. Said differently, it's complicated. But in the scheme of things, Microsoft pairing a little bit of headcount, perhaps to compensate for what might be overhiring over the past several years, is probably not going to matter much.
Meta and Microsoft and some of these other major tech players, like you said, got extremely bloated coming out of the pandemic in terms of their headcount. They now have had a shift in business strategy where their capital expenditures are extremely significant. Microsoft in particular is spending $190 billion on AI infrastructure. So as a result of that, you are really going to scrutinize your labor force to see if there are cuts that can be made somewhere. Now, a lot of times these are being sort of made in conjunction with AI, but I think the real fundamental reason is more cutting glut than it actually is, we're trying to be more efficient with our workforce, or AI is prompting us to lay off employees. I think it's more just the reason of, hey, we just want to trim down our headcount and become a little bit leaner as an organization. I've been focused on the tech sector just because, like you said, we have covered a lot of big names that are announcing layoffs, but it appears, according to Challenger Gray and Christmas, that we have seen in Q1 of 26 job sector announcements of cuts specific to the tech sector at about 52,000, which is a 40% jump from where that was in Q1 of 2025. But again, if you look at just that JOLTS report that I was speaking of earlier, the macro level of the information sector has been running at 1.2 to 1.5% of total employment month over month, which is not far from its long run average. Said simply, there hasn't been a huge indication that the tech sector has been completely punished when it comes to job layoffs. We still have a labor market that has been quite resilient.
Yeah, I mean, if all this AI spending doesn't pay off, you ain't seen nothing yet in terms of layoffs.
Right. When you're spending $190 billion on CapEx or $700 billion across all those big hyperscalers, if that changes or they're not getting the requisite return on investment there, like you said, Mark, well put, that there's certainly going to be changes made there. There's another piece here in CNBC that covers a reversal of positioning on AI, where employers who laid off workers are now citing AI, initially citing AI, are now already starting to regret it. There was an example cited in this piece here, and again, this is a small sample size that's noted in kind of an anecdotal story, but the Commonwealth Bank of Australia had 40 customer service staff that they had laid off to use an AI voice bot to replace those workers, but they found that the AI system couldn't handle all of the calls, and it actually led to an increase in calls for those representatives that they still had working customer service, so they hired back all of the people that they had laid off. And there are similar other stories that are mentioned here where Ford, for example, reversed course and is reemploying hundreds of experienced workers that initially they thought the work could be done with AI. And I think it speaks to a broader point of when you have new technology rollouts, it's bumpy. It's not a smooth adoption curve. There often is a lot of challenges that you don't anticipate, and that can lead to a questioning of how productive is this making us. For example, in the case of this small customer service example for the Commonwealth Bank of Australia, their intentions were to make themselves leaner and more efficient, but it only led to more headaches for the existing employees in place.
The manager that made that decision, whatever level he or she is at, they might want to wait next time and see how, once implemented, the technology actually works out. Yeah. And then decide if some people are superfluous.
Yep.
I mean, really, forgive me, but what management incompetence?
Right. And they were pretty blunt about it. We didn't adequately consider all relevant business considerations. I mean, we should have been more thorough in our assessment of roles required. Saying we should have been more thorough in our assessment of roles required, is a pretty damning way to paint yourself that you really screwed up. That's corporate speak for you really messed up with that decision making there. So again, it's interesting how we continue to see what the labor market trends are. We'll get more data on that tomorrow when we get the month of June's jobs reports. We're going to take a quick break here on the Financial Exchange. But when we come back, talking a little bit about the auto market. It's been a weak year for U.S. auto sales, but hybrids are starting to gain momentum. We'll talk about that more after this break.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Detroit's car makers are missing out on the hybrid momentum. What we've seen through the first half of this year is about a 3% decline in overall U.S. auto sales. However, hybrid sales rose 9% during the first half of the year, and that leaves Detroit's automakers in a FOMO stance where they do not have a lot of exposure in the hybrid markets. It's much more dominated by Toyota and Honda and South Korea's Hyundai Motor Group. Those are all companies that are expected to report higher U.S. sales. And I step back for the story for a minute because I just so vividly remember doing the show back 4 or 5 years ago when EVs were all the rage, and there was a lot of criticism by market pundits levied against specifically Toyota, I remember the most, for not investing in the further development of electric vehicles. Toyota came out very staunchly and just said, you know what, we're going to stick to hybrids. And it's interesting to just read a story like this and sort of have it reaffirmed where their positioning, even amidst criticism, was the right sort of road to take. Now, obviously, the geopolitical conditions sort of changed a bit for electric vehicles during that period of time, which probably helped them in their favor, and maybe that's just a little bit of luck there. But they have been able to take a much more significant market share, just hybrids in general, than the gas engines over the course of this first half of the year here. the hybrid
Yeah,
side.
I don't know how you do long-term planning when the regime changes every few years.
Yeah, it'd be
and
tough.
the ideology driving the regime, and by regime here I mean just the administration and all the people that they appoint. So it's broader than the administration itself. It's the people that they appoint at all levels. We were in the embrace of the green energy revolution, like you said, a few years ago, and we've done, and this might be an understatement, a 180. We're embracing fossil fuels right now. So how do you, if you're Farley at Ford, poor guy, you decided to change the power plant on offer the F-150 with an electric power plant, thinking, well, this is the future.
Yeah.
The regime's pushing us to do this. New regime comes into power, pushing the exact opposite. I mean, these decisions can't be changed on a dime. Now Ford doesn't offer, for example, an electric car.
Yeah, and
or a hybrid car. Correct me if I'm wrong.
GM did a huge write-down on their EV business too.
Caddy went all electric, right?
Right. Yeah.
Or you can still get gas caddies. I don't think that was accurate what I just said, but they planned on going all electric at one point. I assume that's not the case anymore.
No, I think there was several different auto manufacturers domestically that were caught. Not flat-footed, but on the wrong foot, or the wrong foot of investing significantly in EV technology just so to kind of have the rug pulled out from underneath them. On the hybrid side, they took 14% of the market share through the first quarter, and analysts anticipate that it could become a much more significant trend over the next 5 years. According to analysts, it's more than set to double the hybrid market over the next 5 years, accounting for almost a quarter of the market on the hybrid side.
Maybe if you're a manager, you have to say, to heck with the current political environment. I'm going to maintain a diversified product lineup.
Yeah.
No matter what, even if that means the president's going to tweet bad things about me, or the last president's not going to invite me to a Rose Garden ceremony, because the regime could change, the political winds could shift, and another. I don't know how else.
No, you have to be disciplined in your capital management and not get too overcommitted in one direction or another. It seems like that taking a middle ground approach is probably the way to go. From the other side of the auto market, the Chinese auto market has really done an absolute number on these Western car makers, specifically in Germany. This has been an area where they have struggled quite a bit, where Volkswagen in particular had about a 15% market share in China in terms of vehicle sales back in 2015. That number has come all the way down to about 9.7% over the course of the last 10 years. And now Volkswagen is laying off thousands of employees, and typically they were reporting $5 billion of profit in China. That segment now is going to be anywhere from $228 million to $684 million in terms of profit this year compared to where they were previously. And this is what has happened in the Chinese auto market, is that they learned from a lot of Western automakers how to make vehicles, and they've gone out and partially subsidized through the government these endeavors to make cars that are cheaper, have better technology, and are more competitive than a lot of their European peers, and has put Volkswagen and others in a really difficult spot. Tesla is another example too, not a European company, but an area where they had sparked the EV boom in China, and now there are numerous amounts of EV competitors in China that Tesla is up against, BYD being the biggest one there. It has been really dominated by domestic opposites in China, and very much less focus on buying American brands, where the market share of American brands has fallen to about 5% from what was 12% in 2014. So that major trend shift that we've seen in the Chinese auto market for sure. You guys got a 4th of July cookout coming up in a couple of days here. Mark, Ben, Bueller,
no,
anybody?
No,
Mark,
thankfully.
Do you eat hot dogs and hamburgers?
No, we're all
on the 4th of
Tories.
July?
We don't celebrate. We were on the wrong side.
Well, I don't. So yes, on the cookout.
Sure.
Okay.
Yeah.
It is going to be, your cookout is going to be 10% more expensive
that's where you're
than
going.
last year, according to the American Farm Bureau Federation, estimating about $74 to feed 10 in their cookout estimate. That's a 10% increase, or a 9.5% increase from last year. You've had beef prices that have jumped more than 17% year over year. Good news, not for cookouts. Chicken prices have decreased slightly, but that doesn't really help us for Saturday at all. Reasons behind this is, they mentioned just some of the inflationary pressure in general. Barbecue sauce is also up 13% year over year, and soda pop, as they call it in the Midwest, or cited in this piece here, for a 12-pack is up about 12%. So
soda pop. What are you from, Kansas City?
Just reading what the piece says here out of the Wall Street. Is this the Wall Street Journal here? That's no, Barron's. Perhaps they have a Midwest reporter that was on the coverage for this story. But your barbecues are going to be more expensive. Are you guys traditional hamburger, hot dog? I feel like that is pretty much the standard, or you go more elaborate with ribs and steak and stuff for the barbecue?
Normally it would just be hamburgers and hot dogs because that's the easiest thing to do. It's quick and very, very simple, and you can feed a bunch of people with it.
Yep.
But for some reason, my wife decided, let's do ribs this year.
All right. Are you in charge, the grill master?
She never asked me to be in charge of this one, so I think I'm just going to pass. You brought the ribs, you cook them.
The other areas that have seen price increases, I will not be eating country-style baked beans, but they are also up about 10%.
Ben, your wife's on the phone.
Yeah. We've lost our producer for the day. Taking a look at markets, relatively flat today. The S&P 500 is off a measly 5 points. The Dow Jones is up about 90 points, and the NASDAQ is off about 0.5%. That's all the time that we have for the first hour of the program here, but we'll be right back at it with a lot more to cover right after this break. Stick with us on the Financial Exchange.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-5433. 4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Hope everyone's staying cool out there on this scorching July 1st day here. And happy July 1st to Bobby Bonilla, who gets paid $1 million from the Mets every year until, I believe, 2035 or 2036. That dates back to the Madoff days, where they paid him, I believe, $29 million over the course of a sustained payout period that has been going on and on forever. So good job for Bobby Bonilla for another $1 million coming his way. Taking a look at markets, far more pertinent to what I'm qualified to discuss. We've got the Dow Jones up about 150 points. The S&P 500 is up about 6 points. And we've got West Texas Intermediate still down again, even though there hasn't been too much traffic going through the Strait of Hormuz. But we sit at West Texas Intermediate around $68 a barrel. That's down about 1.7% today. Meta is popping about 10% today as they announce that they're going to make a push into the cloud to sell some of their excess AI compute power capacity. And we also have gold and silver rallying a bit, each up about 1.5% or more. We also have the Fed chairman, Kevin Warsh. I went to say Jerome Powell by habit, but Fed chairman Kevin Warsh is in Portugal and currently giving his thoughts on the economy and is part of a panel discussion with other central bankers. Some of the quotes that he's had from the panel here is that inflation is too high, and we'll get into that in just a second here, his job and where we sit on the interest rate front. But we'll kick off this hour of the program by talking about a recent piece that came out here from the Bank for International Settlements that just goes over an annual economic report with the title, Are We Invulnerable or Just Plain Lucky? There has been a tremendous amount of different economic conditions that we have had to face over the course of the last year or so. Around this time last year in April of 25, the tariff announcements came out, and that took over headlines and the majority of economic focus for the months that followed it. That is now in the rearview mirror, and much more of the focus is on inflation and the war between U.S. and Iran, and then artificial intelligence continues to be a major theme here. Marc, curious your takeaways from this piece. It sort of reiterates kind of what the biggest threats that loom on the economy, but also paints the picture of an economy that's been quite resilient over the last year or so.
Yeah, some of these points are pretty well known and widely talked about. I think most relevant for us, because it has implications for capital markets, is the inflation story. A year ago, let's just go to January 2025, inflation was a little under 3% year over year. So Biden handed over to Trump elevated inflation. He also handed over to Trump an economy that was growing fast.
Right.
GDP growth, if you believe that this is a good measure of welfare, GDP growth was 2.8%-ish in 2024 and 2.93 or so percent. I know, I just looked it up. In 2023. In 2025, growth slowed a lot to 2.1%. That's partly due to erratic tariffs and business uncertainty. There's no denying that. You can say, I think the tariffs were necessary. I like this combative policy stance trade-wise, but you can't deny that it freaked out businesses and it probably slowed growth and job creation. So growth is now slower and inflation is higher than it was a little over a year ago, largely due to policy changes. You could say you like them, you don't care. You can say you don't like them, and I blame the president. The facts are undeniable. Those are short-term considerations. They're not affecting investors' perception of the return potential of AI, and that's kept stocks aloft. This article tries to get at things, I think, that could change the trend of long-term growth and that should be factored into investors' estimates of whether or not and to what extent these AI investments will pay off. They point out that inflation could become embedded, and that's on Warsh, who we're going to talk about. Warsh and other central bankers, because the inflation phenomenon is once again global. They talk about AI optimism maybe not lasting. That's connected with some of these other themes, so it's hard to... I mean, investors' sentiment could turn on AI, right? In
Very
isolation,
quickly, I think it could. Yeah, of course.
If hyperscalers, these big providers like these big cloud computing operators who are opening these large data centers, we call them, I guess, hyperscalers. Is that fair? Okay. People may sour on that. So
if they're to trim their capex forecast for 27 or further down the road, I think that would be a significant sentiment hit to investors in the tech sector.
And so elevated valuations plus a change in sentiment around just a few of the so-called hyperscalers could be the catalyst for a market pullback and thus an economic slowdown, because markets are an important when stock prices appreciate, people spend part of that, the so-called wealth effect. Maybe that's the easiest way to think about it. The BIS, which is the author of the study that Martin Wolf writes about in today's Financial Times, also points out financial vulnerabilities, markets being stretched, as they call it, valuations, however you want to slice it, being high. We talk about that a lot. And then finally, fiscal pressures.
Right.
Here and abroad, we got no room to fight recession. We're already running deficits.
6% of GDP.
Right, which is like recession level. That's
Right.
what you run a deficit at. That's what you spend at when relative to what you're taking in, which is what creates a deficit. That's what you borrow to spend when the economy's in trouble. Now, some of that is interest. That's not entirely fair, but interest is the result of past profligacy. So it is somewhat fair. So the BIS goes through this sort of litany. It's hard for me to... some of these are threats to long-term growth. Some of them are threats to the stock market in the short term.
Yeah. I would say that inflation and AI sentiment are probably the short-term ones. Fiscal policy, like you mentioned, is something from a longer-term perspective that could play out negatively, potentially. And it does a good job sort of outlining, I would say, the main points heading into the second half of this year that you'd be most focused on. Inflation is one of them, and then any dent to AI sentiment, and also just what type of sort of, Mike had used the word cost control and focus on just what the spend is going to be related to AI. It will be interesting if we get any more feedback right now that would dent that trend at all. Really what we've seen is companies are willing to spend, and I'm not speaking so much about the hyperscalers, but I'm speaking of the enterprises who are going to be the consumers of this technology. They've been willing to spend significantly to try and learn how it can improve their business. If there's any sort of questioning on how much spend they're allocating to AI or the productivity gains that they're getting from it, I think that could lead to weakening in sentiment. But from all indications, whether you look at some of the earnings numbers on anyone within the AI infrastructure trade, they've continued to be quite strong, and we have seen really robust earnings growth from Q1. We'll see what we get from Q2 when those earnings reports start to trickle out here over the course of the next few weeks.
I would expect continued gangbusters as long as hyperscalers keep buying everything in sight indiscriminately. I would expect earnings growth to be good. Eventually, of course, that sows the seeds of its own.
We're projecting
destruction.
20% for Q2 in terms of earnings
Yeah.
growth. So I'm not questioning that sustaining.
No, I'm not.
It would be more so a market sell-off on pieces of information that were pointing to any sort of negative sentiment on this AI productivity is overblown, or these models are starting to plateau in their efficacy. Those types of stories that I'm mentioning that I could potentially loom as a corrective force.
Or the Fed has to tighten unexpectedly, like right now, energy, and we're going to talk about Warsh, I know. Energy prices have come down. That should be disinflationary in the short term. But you've got inflation pressures elsewhere.
Absolutely.
Food.
Mm-hmm. The cookout, your cookout is on the line.
Driving everybody's prices up. Yep. And the fact that the economy may be growing faster than its potential. I don't know that you can make a strong case for that, but that, in essence, is what the Fed has to be concerned with. This other stuff, the Fed thinks, probably correctly, that it should look through.
We're going to take a quick break here on the Financial Exchange. When we come back, we will be talking about the Federal Reserve. Kevin Warsh is in Portugal with a panel of central bankers. We're going to talk about Fed interest rate policy and much more right after this break here on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
It's time now for trivia here on the Financial Exchange, and today is Pamela Anderson's 59th birthday. Anderson rose to global fame when she joined the cast of Baywatch in 1992, but before her stint on Baywatch, Anderson got her first big break, on television at least, when she was cast in one of the most popular sitcoms of the 90s. So your question today is, which 1990s sitcom gave Pam Anderson her first big break on television? Which 1990s sitcom gave Pam Anderson her first big break on television? Be the third person to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. The third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Talking a little bit about the Federal Reserve, almost as exciting as our trivia discussion today. Just as exciting for Mark, because I know he's always ready.
Yeah, why would you
for
diminish?
Federal Reserve
why would
chatter.
you diminish it?
Federal Reserve chatter.
Is anything more important than monetary policy for asset prices?
It's right up there.
Yeah.
And that's why we have you here. So we have Kevin Warsh, again, as I mentioned, is meeting with having a panel discussion in Portugal with other top central bankers talking about economic issues. Certainly what is the focus here domestically is what interest rate policy is going to look like over the course of the second half of the year. Warsh has acknowledged that inflation is too high and it needs to be addressed. However, he has mentioned that he has been critical rather of the Federal Reserve's stance on being perhaps overly communicative in his mind, and is perhaps wanting to strike a more silenced tone as he takes over. So just curious, your thoughts, Mark, on some of his initial comments and just where you see monetary policy in general.
The Fed has an inflation problem. It's not necessarily of their making. It's certainly not of Warsh's making, who I think has struck exactly the right tone so far. Inflation is over 4% year over year. And if you annualize, say, the most recent 3 months, it's much higher. We've already exceeded the Fed's 2% goal so far in 2026. If we had 0% inflation month over month, if there was no change in the average price of goods and services, generally the way inflation is defined, the Fed would still fail this year, which is pretty remarkable if you think about it. We've had like 2.3% cumulative price growth through May. So we get June in a couple of weeks. We may have some disinflation due to falling energy prices, but that's perspective. We don't really know what other prices in the economy are doing. CPI, PCE, others, they are averages. So he's got a problem. Let's start there. How's he going to handle it? Do you tighten policy at the risk of slowing economic growth? I mentioned in the last segment that economic growth slowed from 2023 to 2024 when it was nearly 3% to just over 2% last year. Probably partly due to erratic tariffs and policy freaking out businesses, maybe due to natural forces, though it didn't necessarily happen elsewhere in the world. So you have to try to cite something domestic. And maybe you think that's a good thing. We needed the tariffs. I don't really care what it does for economic growth. Maybe you think it's a bad thing. It's undeniable, though, that something sort of broke last year. Job creation, too. So the Fed's got this sort of dilemma. It's always got a dilemma, but it's especially acute right now. We've got elevated inflation, and we've got an economy that slowed a lot from 2023 and 4 to 2025. You can kill inflation at any time if you're willing to inflict economic pain. Is Warsh willing to do that? Does he need to do that? He understands this, by the way, which is why he keeps talking about price stability When he says those two words, he's trying to convince me and you and everybody that he means it, that he will inflict economic pain if necessary to squash inflation. We'll find out if people find him credible through inflation surveys and ultimately inflation itself. It's just too soon to say. But you asked, for my 2 cents for what they're worth on his performance so far, and it is a performance, and he knows this. He's got an excellent, I think, read on. He understands the theatrical component of what a Fed chairman needs to do. You got to appear like a tough guy.
Yep.
I'm going to kill inflation, no matter the cost. Volcker did that well. Greenspan had credibility too. Warsh knows this and is trying to, I think, imitate the best of those two in particular examples.
The CME probabilities market, CME futures, assesses that likely at the end of the month here in the upcoming meeting for the Federal Reserve that they will hold pat. That's the most likely probability that they would stay where rates are currently. However, in the month of September here, it does appear that the highest probability would be only slightly, though, a 0.25% of a rate hike.
And one of the problems with that, just real briefly, I mentioned inflation has gone up a little over 4% year over year, which is backward looking, but I'll use it. The Fed hasn't done anything to this point. So what's happening? Well, real rates, the stated rate minus the inflation rate, have actually gone down. So real rates are now negative if you think inflation is somewhere in the 4% ballpark, because the stated Fed funds rate is 3.5, inflation's running at about 4. You sum those two, you get minus 0.5. That's expansionary. You don't necessarily want that right now because then inflation starts to feed on itself. Again, Warsh knows this. He's walking a tightrope. The tightrope is thinner in terms of gauge, I guess, and higher than it's been for a few years now, because we got inflation down to roughly 3, still elevated, but a lot lower, obviously, than its post-COVID peak. Now Warsh is faced with this dilemma.
Yeah, and certainly he'll have to gauge sort of the disinflation impacts, though I know the Federal Reserve focuses on core inflation data that strips out the impact of energy and food, but still is something that he's going to have to contend with. Like I mentioned, we've seen a significant decline in oil prices, obviously a significant run up early in the year, and then a significant decline recently where we sit at $68 a barrel on West Texas Intermediate as of trading today. So it's always a difficult job to balance all of that. The one thing that is working in their favor, or perhaps not, I guess you could argue from an inflationary impact, is the labor market continues to be quite strong, and it looks like those concerns have alleviated to some degree, and inflationary pressure becomes of greater focus. That really is
that means the Fed's got a little bit of room, arguably, to tighten policy if they have to, at the cost of some economic growth.
That is what is going to be in focus. So we'll keep you up to date if there's any other commentary that comes out of that panel discussion in Portugal from Kevin Warsh, but so far limited feedback from that particular conference here. Like I mentioned, taking a look around at markets, we're up about 170 points on the Dow Jones, so a little bit of a rally starting to take place here. The S&P 500 now up 0.25%, and the NASDAQ has shaken off some earlier losses in the day to be relatively flat. On the U.S. 10-year Treasury, we have seen yields rise there in conjunction with Fed Chairman Warsh saying that prices are too high. The U.S. 10-year Treasury now sits up 4 basis points today at 4.46%. Oil, like I mentioned, also down about 1.6% at $68 a barrel. We're going to take a quick break here, but when we come back on the Financial Exchange, we're going to have a great interview here with Bob Pisani about the Museum of Finance in Boston. That's right after this break and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets have turned positive here as we hit 1134. The Dow Jones is up 215 points, or 0.4%. The S&P 500 is up 16 points, or just over 0.2%. And the NASDAQ is flat at 0.0%. Now we're looking at things. Meta has popped 10% as the company makes cloud push to sell excess AI compute capacity. That was just announced this morning. Looking around here, we also got Nike is up 4.5% after it reported a sales decline of 12% in the greater China market. Despite the significant decline in a key market, Nike still reported an earnings and revenue beat in its fiscal fourth quarter financial report. Bloom Energy is up more than 1.8% after it announced an expanded partnership with investment firm Brookfield to finance power for artificial intelligence infrastructure projects. Bloom said in a press release the expansion shows sustained demand from AI infrastructure developers. Kroger shares are off just about 1% after the company announced it will acquire Giant Eagle, a food and pharmacy retailer, for $1.65 billion. Kroger CEO Greg Foran said in a press release that the acquisition expands the company's reach into attractive adjacent markets. And Shutterstock and Getty Images are tumbling after Getty called off a proposed merger with Shutterstock due to demands from a UK regulator. Shutterstock shares have fallen sharply over 28%, while Getty has declined 7%. I am Ben Kitchen, and that was Wall Street Watch.
As promised, we are joined by Bob Pisani. He had spent 35 years working at CNBC. For many listeners out there who have watched CNBC, I'm sure you've seen him over the years. He recently stepped away from his role as senior markets correspondent on the floor of the New York Stock Exchange, but he joins us today to talk a little bit about the Museum of American Finance, which is going to be opened up in the Boston Seaport area on July 3rd. Bob, thanks so much for joining us.
Hey, Paul, it's a pleasure to be with you, and pleasure to be in Boston, one of the cradles of American democracy, and one of the cradles of American finance as well.
Absolutely. We appreciate that nod, and nice and warm for you, too. We made sure that we took care of that with temperatures reaching close to 100 degrees. Bob, before we get into the Museum of American Finance, just want to get your thoughts on the markets in general. We closed out the first half of the year here with some tremendous quarters for the S&P 500 and the NASDAQ. From the second half perspective, what are some of the areas that you're most acutely focused on heading into the second half of 2026 here?
Well, people always are a bit astonished at the volatility in world events, and sometimes even the volatility in market events, and are amazed why the stock market doesn't react more negatively, for example, to the Iran war. And while it did, certainly on commodity front, I always tell people what exactly is a stock and what is it you are getting with a stock. And what you're getting with stocks is a promise to participate in the future stream of potential earnings, whether that earnings is in the form of a dividend, whether it's in the form of a buyback, whether it's in the form of paying down debt. But you are participating in some ownership in the company and the future stream of earnings. Literally, that is the definition of a stock. And the fact is the earnings picture of U.S. stocks are excellent. They are particularly good in the technology sector. So look at the S&P this year. We're talking about 20% earnings growth overall. That's really an unusually large number. And in technology, 30 to 35%. And you can argue about concentration risk all that you want. But as a guy who believes in market cap weighted indexes, and I'm a Jack Bogle guy, I'm a Vanguard guy that believes in indexing, I am not that worried about the concentration. I participate in, my biggest holding is the S&P 500 index funds, and I participate in the growth of tech funds, but I also own a lot of other things in there as well. So it's the earnings that matter, the future stream, and those future stream of earnings look very good right now, and that's why the market's holding up.
Yeah, like you mentioned, Q1, I believe we were 28% year over year, and Q2 is anticipated to be, like you said, plus 20% for the second quarter as well. So important color to provide there. Now, pivoting gears here to the
Let me throw in one
Sure.
other thing on just so in terms of things that I worry about. I've gotten a little more concerned over the years about the debt situation of the United States and the dollar position.
Sure.
You generally want a strong dollar. Strong dollar helps support global commodities, helps support strength in gold. And to the extent that the dollar weakens, you have, and you saw this earlier in the year, what I call the devaluation trade. devaluation trade is essentially the idea that fiat currencies are going to continue to be extremely inflationary. The dollar is going to weaken, and the position of trust of the United States is going to decline globally. Because of that, we saw this unusual move in gold earlier in the year, and we can debate gold all you want. It's not the time to do that, but the devaluation trade came into play very earlier this year. That is now starting to decline a little bit, but there are legitimate questions about the debt situation and about the ability to keep printing money to finance the debt situation. When I left CNBC last year, I was turning 70, which is why I left CNBC. There were viewers who had some very interesting questions about whether it would be a good time to own gold or even inflation-protected bonds, TIPS.
Yep.
And there's a tell when the viewers, and CNBC viewers are like your viewers, your listeners, same group of people, sophisticated, somewhat older people with money in the markets who may not be day traders, but they're just watching their money and they're very aware of what's going on. And when you get viewers saying, Bob, I'm a little worried about this. Should I own TIPS? Should I own gold? That's a tell right there. And I generally don't make moves in my portfolio. I did here slightly, and I did not buy gold, but I do own some TIPS. So there's a tell right there. When the viewers start worrying, pay attention.
Yeah, certainly we had peaked around $5,300 an ounce for gold and had seen a significant run up in the commodity market, and we sit, with a fiscal deficit of 6% of GDP. So hear you on all those concerns. Shifting gears a bit to talk about the Museum of American Finance. Like I mentioned, that's going to be opening up to the public on July 3rd in the wonderful Boston Seaport. Bob, can you give us a little bit of a taste for what listeners could expect if they were to drop in, maybe perhaps highlighting some of the exhibits, or just give us some background on your involvement in this project?
Well, I've always been interested in financial history because it's very simply financial literacy is key to understanding where the country has been and where it's going. The country was founded on financial innovation. Alexander Hamilton, the first Secretary of the Treasury in 1789, was one of the great financial innovators of all time. He had this brilliant idea that he sold to George Washington and John Adams to assume the debts of all of the states. The states were ruined by the war. They had issued bonds that they were ready to default on them. The U.S. government had almost no money. They were going to default. And Hamilton came in and said, we should establish full faith and credit in the new government. Let's take on the debts of all the states. Let's take on the debts of the United States. Let's create a strong central bank. Let's issue new currency. And there were people opposed to this. Jefferson was opposed to it. The idea of a strong federal government, the states wanted power. They distrusted a strong central government, including Thomas Jefferson. Madison was persuaded in a historic deal that they made, James Madison, in exchange for supporting the first bank of the United States, the first central bank, they would move the capital to Washington, D.C., which then didn't even exist. We're talking 1789 here. And essentially, there was what's called the Great Compromise. And so Alexander Hamilton, with this tremendous financial innovation of a strong central bank, helped put the United States on a very sound footing for a long time. And that's been the story of this country, financial innovation, mutual funds as a financial innovation, ETFs, securitization, anything related to these ideas in the last 50 years that have helped advance financial innovation. And now we have new forms of financial innovation like blockchain and Bitcoin. You can debate how much you want to be involved in these things, or even prediction markets. But the country is founded on financial innovation, and that's what the museum is all about. So you'll walk around through this. You'll have a little history of U.S. currencies. Where did the dollar come from? How it was related to gold. There's an interactive Alexander Hamilton. You could talk to Alexander Hamilton and ask him questions, and he will talk back to you. It's really something. We were just playing with it today. There's a whole little interactive timeline of financial history. If you want to know about the Civil War, how the U.S. government issued its first paper currency in the 1860s to pay for the Civil War. There's a whole section on the future of finance, talking about blockchain and tokenization. And then there's a whole section on personal finance. The federal government is just a little a big part of an individual's little budget. So your personal budget and the government's budget are somewhat related in a lot of ways, and it talks about how you can get control of your own personal finances. So controlling your household spending is just as important as the federal government controlling its own household spending. So the point is, the country is founded on money and financial innovation, and to the extent that people don't understand that, it's a problem. And if you ask me, Paul, about the one thing I worry about, I do not worry about the S&P 500 or where it's going to be at the end of the year. That's the most common question I'm asked, and it's the one that least interests me. I am worried about people not understanding what the country's based on. I'm worried about wealth inequality. I'm worried about the fact that 10% of the households own, roughly 86% of the stock market value, and the other 90% own very little. That's not a good deal to me. I'd like to see a little bit more of the wealth pie spread around. I want to spread investing culture, and I know you talk about this all the time, about how to increase the pie, how to get more people interested in investing culture, long-term investing culture. I don't mean let's go to the racetrack and bet it all on Bitcoin or anything else. You know what I mean.
Yes.
Let's get rich slow, not get rich quick. That's what the museum is about.
Absolutely. Financial literacy is critical. I certainly agree with you there. For any listeners out there that want to come check out the Museum of American Finance, like I mentioned, it is opening up on July 3rd to the public in the Boston Seaport at the Commonwealth Pier. Bob Pisani, thanks so much for joining us, and have a great time in Boston, and best of luck with the opening on the museum on the 3rd here.
Thanks for having me on, Paul. Really enjoyed it.
We're going to take a quick break here on the Financial Exchange, but when we come back, a little bit of Stack Roulette right after this.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
All right, let's pay off a little trivia here. Our question today was, which 90s sitcom gave Pam Anderson her first big break? That would be Home Improvement, when she played the first Tool Girl on that show. Today's winner is Suzanne from West Yarmouth. She'll be taking home a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
All right, as promised, time for a little bit of Stack Roulette. What do you got for us, Mr. Fandetti?
Did you guys see that we didn't renew the USMCA, the Mexico-Canada Trade Act that replaced NAFTA?
I did not see
that. So
that.
the president, I guess, well, I know, he scrapped NAFTA in his first term, telegraphed that, no big surprise. He replaced it with this USMCA, a lot of fanfare, lauded at the time by anti-free traders as, a better deal and so forth. Scrapping that now in exchange for ongoing talks, which the president likes to do. He could say they're going great, and every month he can do his great theatrical thing, which he's very good at. But it I guess, plays to his stagecraft instincts. But if you're a business and you've set up cross-border supply chains, which we know auto manufacturers have, cars can go back and forth dozens of times, right? Airplanes go back and forth.
Absolutely. That was a big takeaway from all the tariffs.
Yeah,
I didn't realize how much the cars go back and forth over the
literally,
borders.
like dozens of times,
Absolutely.
potentially.
Yeah.
So manufacturers have geared their entire business model to trade. I'll just say some certainty. It's a bit of probably too strong a word. Some stability. We have the exact opposite now. So if you want to know why we got lower growth last year, much lower than the previous 2 years, it's this type of erratic. I'm not saying don't. This is a political question, not an economic question. The economics of free trade versus trade barriers are clear. You're better off without trade barriers, but there are political costs. So it's as much a political as maybe an economic question. But you can't deny that uncertainty is a killer. And we keep screwing up a free lunch here, which is all the AI investment and the big boost to growth that happened in the last 2 years of Biden's term that is still ongoing, that you could be the beneficiary of if you just sat back and did nothing. All these self-inflicted, chaotic policy reversals and the drama, it just hurts growth. It makes it very difficult for investors and businesses to make decisions.
No question. The FDA is letting Philip Morris market Zyn nicotine pouches as less harmful than cigarettes. This is a major win for Philip Morris from a marketing perspective because they can, espouse that though certainly the nicotine pouches aren't great, they're not as bad as cigarettes. I'm not really jumping on this story with an edict one way or another on the market in general. It does seem like this is something that is just the next pivot. I mean, I know that vaping was something that took over for cigarettes, and now it seems like you see these Zim pouches a little bit more frequently than you do cigarette consumption. And so from Philip Morris' perspective, certainly positive news here on that marketing
I guess if you're
front,
addicted to nicotine, you look for the least harmful
Right.
way to wean yourself off of it.
Sure.
But
I not much to say other than that,
Yeah.
but just interesting to note that that is a good way of looking at it, Mark, is perhaps
these are two very
different-
powerful industries too. Tobacco, as we know, has a strength. I mean, those things should probably be. I don't want to offend smokers, but if it's going to kill you, the government should make it illegal, right? We do that with alcohol. We restrict alcohol, and we do the same with cigarettes. I guess
Don't you
have to be
take away
over
my
18.
guns.
Yeah, I mean, again, as a sort of libertarianish person, I hesitate to say, well, don't let's. If somebody wants to kill themselves, I shouldn't put it that way either, because it is addictive.
I tend to
so
come.
What the heck? What am I trying to say?
I would say I land on that side with gambling and cigarettes
but
and alcohol
gambling,
and weed. It's like, hey, you can do what you want with it.
But I guess as a libertarian, I should be saying, yeah, but don't come to me to pay your healthcare costs when you're 60 and you get lung cancer. You made the choice. Is that fair? Or might they respond with, well, it wasn't a choice. I was addicted. The industry addicted, which is, of course, the source of a lot of litigation.
Yeah.
The industry addicted me. I have no choice.
It certainly is a tricky subject
a little too fraught for us to hash out
particularly
in
this
30
close to July
seconds this
4th.
morning when I don't know what I'm talking about.
I do want to reiterate something we talked about a little bit earlier in the show. We were on previously with Bob Pisani talking about the Museum of American Finance. We think this is a great exhibit that is set up at the Commonwealth Pier in the Boston Seaport District that will be opening on Friday, July 3rd. It's a 5,400 square foot museum that has 7 different exhibits ranging from, the earliest on just the creation of the dollar to more of the future of finance, discussing blockchain and crypto, all the whole gamut of sort of the evolving nature of the financial industry across the United States. So check that out, Museum of American Finance, an affiliate of the Smithsonian Institution, that will open up on Friday, July 3rd in the Boston Seaport area. Thanks so much for the time today. That's all that we have here on the Financial Exchange. For those of you out there, I hope you have a fantastic 4th and stay cool.